Okay, recording this video on Sunday, the 28th of August 2022. It's just gone 1:20 a.m. Chicago time. Do hope you are doing well. So, this is our weekend futures market recap, where I go through 15 of the largest futures markets and show you what I'm seeing on my charts. But before getting to that, just to say we are back in Europe. Flew into Rome a few days ago, spent 3 or 4 days there, which was great, catching up with a good mate of mine. And now we're down in Naples for a couple of days before getting on a ferry and going across to the islands of Ischia and Capri, and going to be spending a few days there. It's great to be back in Europe. It is hot, but not too busy. Rome actually in August is very nice. Traffic was very manageable. Yep, tourists around, always are tourists around, but it wasn't too kind of crazy, and that was nice. Sad thing for me is my favorite pizza place, Ai Mami, shuts for August, so they weren't there, which was a real shame. But anyway, such is life. So let us talk about Friday and Powell and what damage he did to the market. Frankly, that took me totally by surprise and kind of annoyed me because there wasn't much signaling on the charts for it to happen. Had a great trade at the beginning of the week, long soybeans, and gave it all back, being taken out on a stop on a long Emini trade because of what Powell had to say. So it's kind of important. It's kind of not messed up the charts a little bit. It's kind of brought us down though to another level that we're going to have to build from in order to see a final push up in the equities markets. Let us talk to charts first of all, and I think for me the psychology of the market is best explained by this chart here for Apple. So this is the traditional view of the better indicators with two charts kind of side by side, so we can see things a little bit more detail. On the left hand side we've got everything to do with volume, with better momentum below the price bars, and on the price bars themselves we've got better pro-am showing professionals and amateurs. Professionals in blue, amateurs in yellow. Right hand side, everything to do with price based on better sine wave here, the plate of spaghetti underneath the price bars, which calculates the cycles in 3 different time frames, and then breaks of support and resistance break us into trend moves, and uptrends are shown in red, downtrends are shown in white. So first of all, let's just look at the volume patterns for Apple over the last 6 months or so. So first of all, the bottom that was made in 2000 with the sell-off here, all the blue professional bars kind of came in and the market raced away. So at 60, they picked it up here, and the next time we see blue professional bars, bang, is at the high up here at 180. So they bought it down here and they were getting out up here, and you can see there's a couple of good things going on with this pattern. First of all, we have a blow off top with exhaustion patterns and a bearish divergence pattern here with the white dot at the top. Blue professional bars taking profits into 180, bang, classic. The market kind of fusses around there, then finally kind of sells off into this 130, 140 kind of area down here, from which we rally back to test. And the test you can see is Rambo patterns pushing us up. Amateur bars pushing up into that high, and 2 Rambo patterns right at the top there being made just under 180. Rambo stands for a potential reversal of an amateur breakout, so RAMBO, reversal amateur breakout, and just shows the move is being led by the amateurs and is weak. Sometimes it ends up being a reversal point and we turn into a change in trend. Sometimes we just see weakness after that push up, and then with Thursday into Friday's activity, kind of more amateur bars, and then bang, got hit hard. Wasn't a professional down day on Friday, but we kind of got hit hard there. So that's psychologically what we are dealing with. The professionals got out of this a while ago, December time, and the amateurs have been driving this move, and they're about to be kind of wrong-footed up here. The question is this the end of this test back up, or are we going to see another test back up into, let's say, 180 or so? And for me, then I have to go to the cycles. So you can see here back in 2020 we broke into this big uptrend. I mean, all of the bars are red going up here. We have a couple of areas of weakness where the bars turn white, and then the uptrend just continues till we get those kind of blow off patterns here. Now into this high we saw exhaustion patterns and pullback to end of trends and triples up here where we just can't get through the resistance that we put in here. And bear in mind, this is a pullback to end of trend On the highest time frame, you can see the thicker lines here, pull back to end of trend. But we didn't just bounce off here and pull and come down. We went through that resistance on that highest time frame, which just shows the strength of the market, that it was just pushing up and up and up. And normally when we kind of top out in these markets, we bounce off those highest time frames. So what we were doing at the moment, or in the last several weeks, we had found support at 129 on this highest time frame, and we were pushing up into this area. And this is where I've been talking about on the E-mini chart. You could see this. We had being caught by the next highest time frame. We broke above the lowest time frame, and we were caught by the next highest time frame here, resistance at that point. Because we have gone past this resistance on the highest time frame, there is still strength in the market, which means this support to resistance on the highest time frame should play out. We should actually keep going through these highs until we get across these thick lines, and we have resistance at that point. I don't think this is all over to the upside, and I think what we just saw on Friday was a really deep push down, driven by the professionals at the beginning of the day, and that they're picking it up at the end of the day. And over the next couple of days, I think we're actually going to find support and go back up. And these amateurs here who were caught at that point are probably going to be caught out on the downside and pushed out again. So they were buying here, and there's been a nasty reaction to them, so they're panicking at the moment. And then in the next couple of days they'll be selling, and the market will reverse again, and they'll be caught out again. And it's because we overshot this resistance on this highest time frame. So what I'm looking for is these two lines on the lowest time frame to kind of come together in the next couple of days to find an area of support. Now if we go to the E-mini and look at the same chart, daily data only, so at es.d, you can see we've got a similar kind of pattern going on. We bust above the highest time frame here, and what we were putting in was the pullback to end of trend move on the highest time frame. For this to be totally negated, this pullback to end of trend move, and just we kind of give it away and we never see that pullback to end of trend, we'd have to break through 3800. So it doesn't look too far away. If we have 3 or 4 3 bad days in a row, we could kind of crash through that. But I just don't think that's going to happen. This is the overshoot that we had, overshoot resistance on the lowest time frame, and we're caught by the highest time frame. I thought we were going to push back a little bit further, so that Friday's activity kind of took me by surprise. But we've got to make support here on that lowest time frame, come in and make a pullback to end of trend move or something like that. If it is a pullback to end of trend, it's going to be made in the next 70 points between this close and 39.80, kind of around there. So it's within 70 points or so. That low is going to be made. It'll be a little pullback in an uptrend on that lowest time frame, and we'll put in a move back up. So I know Friday was super scary, and kind of got the message now that the Fed is going to continue to tighten despite everything, despite inflation probably being more driven by supply shocks and supply problems rather than demand problems. But anyway, they're going to keep on doing it. And I think we're going to be kind of surprised that it'll kind of turn around and move to the upside. Let's go down some time frames and see what we're seeing there. On the 15-minute chart, this is the activity on Friday, where on the tip bar charts there was a Rambo pattern right here at the high, but then the professionals bang selling it down. It's a nasty read on better momentum. It's kind of the kind of previous momentum reads have been down here, so it's like that was the strength of the selling. On the tip bar charts, you can see professionals coming in at the end of the day. And in terms of cycles, yep, this was what I was playing, that the support on the pullback on the 15-minute chart had held, and so we were rallying here, but it just kind of gave way at this point. We've overshot support on the lowest time frame. We're going to be caught by resistance on the intermediate time frame, and we got the cross down here on better momentum. So that's potentially in due, which will give us another triple support, bang, bang, bang on those 3 time frames. 45-minute chart, yep, it's kind of here. There's the cross, There's the blue professional bars coming in at 55. Whether Monday is still going to be a bad day. I think it will be bad in the morning because people are freaking out over the weekend, and so they'll put in their sell orders ready for the open on Monday. But the professionals could just step in. So it'll be interesting to see kind of Monday into Tuesday if we do hold and kind of push back up, and all of those sell orders have just been artificially pushed out of the market. And this is why it's all the amateurs here at the highs, and the professionals are coming in here. So if we break back up, if we hold and break back up, we're going to go look above 4,300. I know this is it's not the mood in the market, but that's why it's important to try and understand the market puts the most number of people in pain, and I think that would be the move that puts most people in pain, that they kind of sell the Monday morning based on Friday's activity, and they get wrong-footed by the end of the week. The 135-minute chart here, yep, we put in resistance at this point here, but we're still in an uptrend. We've still got to make pullback to end of trend on the intermediate time frame. So that intermediate time frame is going to cross, hold us, and put in pullback to end of trend, and we go above 4,300. But we'll wait and see. Maybe I'm just totally wrong. We get through 3,800 and just have 2 or 3 down days that just keep going down. It's like then it's all over. It's we've played this move out, but I think there's another push back up. Anyway, so there we go. So that's my counterintuitive kind of read on this. And if we go to the tick bar chart on the E-mini, this was the move back up. So this is why I was long into Friday, because we'd had signals here. Blue professional bars had come in. We'd broken into this uptrend. Yep, at 4,200, some blue professional bars came in. There was a Rambo pattern there on the 13,500 tick bar chart, but on this simplified view, I don't show that. And then the market kind of sold off. But we've now had exhaustion sell. Blue professional bars coming at 40.50. Yes, we've got to put in a bullish divergence and so on. But let's wait and see. This week if that actually kind of does hold during the week. And that was just a nasty scare on Friday. The other charts that are really interesting me at the moment, and they're all. It's interesting that I look at them as a group up here. They're the crude, natural gas, corn, and soybean charts, because on the longer term charts they're starting to hold, and if we break certain levels on these markets, we're going to see some strong tests back up. Now crude has been in a downtrend for a while, but we've settled back down in this kind of 86 to 94 kind of region, having reached, I don't know, did we get to 120? Anyway, I'm not sure what the high number was up there. But we bottomed nicely in crude here, had a triple signal at the end of last week, and we rallied from there. We've had a little bit of weakness here and a triple signal happen over the last couple of days, but for me, this wasn't a blow-off move. They didn't have blue professional bars at the high. The exhaustion pattern was getting the move going here, not at those highs. And I think what we've just done from 94 to 92 is just clear out a lot of people in the market. Break back this week above 94, and I think we're going to go higher on crude, up above 100. So let's wait and see. 94 is the number here. Break back above that, we'll probably kind of go through these highs. So crude's doing that. Natural gas, similar type pattern. Yep, we had exhaustion patterns here, and that's what's generated this triple signal, but no blue professional bars really at the high. A couple here, but then a whole family come in and hold it at $9. Exhaustion sell, bullish divergence, so we've got rid of a lot of selling volume here. We're holding here. We get above 960. Again, same thing. We'll break into another leg of this uptrend in natural gas. Now, soybeans, this was my nice trade for the beginning of the week. We had a triple signal here, and bang, took off to the upside. So it had bottomed nicely. Exhaustion sell, bullish divergence, flush, flush, flush. Blue professional bars getting the move going here at this point here. We break above that little area. Blue professional bars step in again, bang, and as soon as we're through here, confirmed uptrend, bang, and we go to exhaustion buy, bearish divergence marks the top. We've kind of come off. Now the blue professional bars here have come in not at the top, but at this kind of previous high. So it's almost like a gathering pattern, waiting for that. We pushed nastily down from those highs here. But again, if we get above this 67, we start looking to those highs, we're going to break even higher on soybeans. Corn. Now corn, we'd had this whole family, I'd been talking about this over the last 2 weeks. Was this going to be the week when the ags took off? I've been saying that for 2 weeks, and this was the week when they took off. So we had our signals back here at the beginning of August, just basing and basing. Finally, bang, we get the explosive move this week, and those blue professional bars are getting the move going. That's a gathering pattern, bang, pushing it up. Yes, we've had some weak patterns here. No blue professional bars at the highs, but it didn't go anywhere, and we immediately break back up above 665. So let's see if the move in corn continues. So that whole grouping for me is really interesting. So it's the kind of, and there's a connection between, you know, the corn and the soybeans and gas and diesel and oil and so on. So as a group, that could be interesting to kind of look forward. Wheat, yes, similarly, kind of exhaustion sell, bullish divergence, blue professional bars coming at the lows. The reason why it didn't signal a triple at this point here was it was not oversold on better sine wave. We have overbought here, but it never came together to be an oversold on better sine wave. But it is still strong, breaking into this uptrend. Again, is it going to follow the rest of the ags? If they continue higher, that whole grouping will be pulled forward. Copper, not much really going on in copper. It's kind of having had some really big trending moves in copper over the last year and a half. This is just doing nothing. These signals are not going anywhere short, not really going anywhere short, kind of break back up. It's just a lot of noise at this point. So for me, nothing on copper kind of looks interesting. The Forex markets, so the euro obviously kind of trashed, and this was the last signal that we had on euro, which was short at 104 up here at the highs. So we move into a strong downtrend, we consolidate at 2 and then continue the move down, and at the lows down here, so we got through parity. We had initially bounced off dollar euro parity, and now we've broken it. But at the lows, no blue professional bars, no exhaustion sell, and in fact what we have here is short covering rallies. These are generated by people being short. They're kind of caught out on trailing stops that are triggered here and here, and blue professional bars kind of come in and hold it, push it back. That to me looks like killing fields, where they push it back up to 101 and use that whole activity to kind of get short. So it breaks through 99.5, bang on the way down, can continue the move in the euro. So the euro is still weak. Same thing with British pound. We kind of kept on down. That's the consolidation kind of area. We came down to the lows, but again, some blue professional bars, but no exhaustion pattern here. And then just playing with these, triggering short covering at this point here, and then into Friday, bang, selling it down, triggers a short signal. So we're still weak on the pound. And Aussie dollar, Aussie dollar, same thing. So there was the move into consolidation, kind of caught down here. We had some nice kind of triple signals because we had exhaustion sell and bullish divergence, blue professional bars at the lows. Yep, it kind of moves that, but up to 70, can't get through 70, and then I think it just kind of followed the rest of the pack on Friday with that weakness. It's not going to do anything different than the rest of the Forex contracts. Japanese yen, similarly, signal down. That was our stair-step trade that I talked about. Was it 2 videos before, or the last 2 videos I talked about that, how that was a likely pattern, and it happened. Consolidation, come down to the nose, no exhaustion at these lows. Yep, blue professional bars kind of hold it at that point, but this is killing fields, and we break through 73, bang, kind of continue down. So all of those are weak. US dollar is strong, and that's kind of interest rate differentials that people are expecting to widen, and that's why the interest in the US dollar. Gold and silver. Again, we had this kind of weakness, but yes, some exhaustion patterns, but not a heck of a lot of blue professional bars picking it up on the way down. They pushed it up at this point here and using that as kind of killing fields. So I don't see that breaking into an uptrend kind of soon. So breaking back down through these lows, maybe that will bring in the blue professional bars at the lows. Gold, silver, yep, a little bit of a pattern, but look, no exhaustion sell down here. That triple signal is based on that exhaustion sell bullish divergence, and it's in the wrong place. It should be down here. So no blue professional bars at the lows, no exhaustion sell at the lows. So we're still weak on silver, Bitcoin, and yeah, this was messy. So we had a whole bunch of blue professional bars, exhaustion buy. We'd had a signal that had tripped based on these patterns, and it really was not a good signal there. 21.6 or 4, and we just kept on going down. And again, no exhaustion sell patterns down here, no blue professional bars at the lows. So Bitcoin is still weak. So we're done. 10 years. The bonds keep on trying to hold, but there's not enough blue professional bars kind of come in. You'd have thought that was good and that was good, but the break doesn't hold. We come back down again. Blue professional bars kind of step in. Exhaustion sell, you can just see it kind of just there. Bullish divergence comes in, that's why we've got a signal at that point. So let's see. We've had some false signals. That's good. Strength, showing that we're in an uptrend on the price bars there. And so, you know, if you think that bonds are going to rally, that means rates are going to decline, which is kind of against what Powell was talking about on Friday. So who knows? If this area is tested, I don't know if we get some blue professional bars kind of come in here at the lows. Let's see if that whole thing kind of holds on bonds. So I think that's it. I think I've done all of the charts there. Probably a fairly long video, apologies for that, but Friday was an important day. But let's just wait and see this week if we get kind of the psychology with the amateurs getting wrong-footed on Monday, Tuesday, and actually that sell-off on Friday was just the precursor to a continuation of the test back up. Let's wait and see. Should be an interesting week. Anyway, hope your trading is going well, and looking forward to this week's trade.